Welcome to the Daily Insights that matter. In a groundbreaking move that could electrify India's automotive sector, Tesla has set its sights on the Indian market. The EV giant is not only eyeing a grand entrance into the Indian market, but is also gearing up to source an impressive $1.9 billion worth of auto parts from the country this year. Back in 2021, Tesla tried to enter the Indian market but did not go ahead as there was a disagreement with the Indian government. Tesla wanted lower tariffs on importing cars to India, and on the other hand, the Indian government wanted Tesla to manufacture locally. Fast forward to now, Elon Musk confirmed that Tesla will be in India as soon as humanly possible. Furthermore, during an address at the Automotive Component Manufacturing Association, Union Commerce Minister Piyush Goyal underscored Tesla's significant role as a major purchaser of Indian auto components. In fact, Tesla imported auto components worth a staggering $1 billion from India last year, with this year's target ranging between $1.7 to $1.9 billion. Additionally, according to Grant Thornton, India's consumption and export figures in the auto components industry are projected to witness exponential growth over the next decade. Notably, India's auto component sector, contributing 2.3% currently to the nation's GDP, is on track to become the world's third largest by 2025. Tesla's expansion into India aligns with the global shift towards electrification in the automotive industry. Tesla has expressed a keen interest in establishing a domestic manufacturing facility geared towards producing EVs priced at around $24,000, approximately 20 lakh rupees, to cater to the Indian market and facilitate exports. The strategic shift demonstrates Tesla's willingness to engage in local production within India, overcoming previous hurdles related to import taxes on EVs. Moreover, this move resonates with the broader goal of Make in India initiative and the broader push for local manufacturing, which promises a multitude of advantages for the Indian economy. Inflation has been a concern for the US economy, with high rates experienced for several months. The last couple of months of data showed a significant improvement, down from 40-year high of 9.1%. The Consumer Price Index, or CPI for short, showed a rise of 3.7% over the past year in August. That's a bit of an acceleration compared to the 3.2% annual gain in prices we saw back then. This increase was slightly higher than what economists had predicted, coming in at 3.6%. One of the key factors driving this inflation is the price of energy commodities like gas and oil. They've shot up by a whopping 10.5% on a month-over-month basis. Gas prices in particular went up in August due to Russia and Saudi Arabia making aggressive cuts in supply, which pushed the price of crude oil to a 10-month high of $91 per barrel. Surprisingly, higher gas prices contributed to more than half of the overall inflation rate increase. When we look at things on a core basis, which basically means we strip out the more volatile cost of food and gas, prices in August still managed to decline to 4.3% compared to the previous year. It's a bit of a slowdown from this 4.7% annual increase we saw in July. Now the big question is, what is the Federal Reserve going to do about this? Inflation has been consistently way above the 2% target, plus with oil prices on the rise and the job market while not as strong as before. There's some concern that the Fed might decide to keep raising interest rates later this year. Just to give you some context, they already raised rates by another 0.25% in July after taking a breather in June. But after this latest data came out, the market seemed to be pricing in a pretty solid 95% chance that the Federal Reserve will keep rates unchanged at the upcoming policy meeting on September 20th. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.